This is your Wall Street wake-up call. Global stocks are rallying after the Bank of Japan made some key changes to its monetary policy. For more, let's bring in Carol Schleif, Deputy Chief Investment Officer at Abbot Downing. So, Carol, let's review what the BOJ did. They kept rates unchanged and in negative territory, but they also set this new 0% target for their 10-year government bond, a 0% yield target. What does that mean?
Well, and I think the other piece to the matter is they also set the target of inflation again, or reaffirmed at the long end at the 2%. Yes. And I think that 10-year number at 0%, stipulating that they'll try to stay there, really means that they're trying to look out for the banks and for the insurance companies and trying to give some ease. It also, looking more broadly, gives some wiggle room, if you will, to the Fed longer term.
And we'll talk about the Fed in a moment, but its stimulus, of course, is unchanged at 80 trillion yen a year, but they obviously want to get above 2% inflation, so perhaps more stimulus, in the coming months or even early next year.
That's the hope and the expectation. I think a lot of people on the street are scratching their head over this move because of the various potential moves. This wasn't necessarily one of the ones that rose to the top. But I think they're grasping at straws, as they have been for decades now.
And do you think that, though, this sort of veiled attempt at more easing by implementing this new, 10-year yield target was sort of a way to pave room for the Federal Reserve? Of course, they're meeting later today.
Yeah, I think that does give the Fed some room to pause, but I think, or not to pause, but I think it gives the Fed some wiggle room in the longer run.
Sure.
I think the biggest issue is that the whole world is sort of obsessively focused on our Federal Reserve central bankers, and they're just one leg of many legs, in three in particular, that we're striving for. Because when you think about it, what the long-term goal is, creating an amenable environment for business and consumers to operate in. That takes politicians, it takes regulation, it takes businesses doing their part, paying their share and doing their part. It takes consumers. The consumers have been there. Businesses have been shifting things all around the globe. But the difficulty is the whole world is focused on Federal Reserves and central banks and not held other people accountable for what.
And as we look ahead to the Federal Reserve meeting later today, do you think they'll stay on hold? That's what most market participants are pricing in.
Yeah, I think they will, because this Fed is bent over backwards to be very conscientious and concerned about prepping the street, if you will. My personal opinion is I wish they wouldn't, in terms of the sooner the globe gets back to normalization or moves towards normalization. And whether or not the Fed does short term, I think when I said I wish they wouldn't be as upfront and transparent as they are with their verbiage. I mean, I grew up in the Volcker Fed and the Greenspan Fed when they were a lot more opaque about their commentary, and markets went off and did what markets do.
And if the Fed stays on hold today, do stocks rally? Are we just sort of back to business as usual, at least until December?
Yeah, I think it's back to business as usual, because the markets have priced in the expectation that the Fed holds. If the Fed doesn't hold, and or if the commentary that comes out is very hawkish, you could see some volatility in the
And
markets.
just quickly in the last 10 seconds, anything you're buying or opportunities that you're looking at right now?
We're kind of waiting in the wings, hoping we do get a pullback, and then we're buying stocks.
All right. Well, Carol Schleif from Abbot Downing, thank you so much for coming in.
Thank you for having us.
I'm Scott Gamm, and you're watching The Street.